So this class is for those who have missed the first class of class 12 and for the upcoming batches which will start in Shodhpur, and due to lockdown live classes cannot be taken, so here is with a video. So profit and loss appropriation account or partnership fundamentals is the name of the chapter. So what happens is, in case of final accounts in class 11, what we did in final accounts, we made 3 accounts, that is trading account, PL account, and finally balance sheet. Actually balance sheet is not an account, it's a statement of assets and liability, a statement showing the financial condition of the business. But in case of partnership firm, we need to make trading, profit and loss account, profit and loss appropriation account, and then balance sheet. So here comes the profit and loss appropriation account. So what is the nature of profit and loss appropriation account? Profit and loss appropriation account is a nominal account. So it records all expense and income. It records all gains and losses. Because in class 11, you all have learned the golden rule, where nominal account states that debit all expense and losses, credit all incomes and gains. So hence, as PL appropriation account is a nominal account, we will record all expense and losses of the business in the debit side and will record all incomes in the credit side. So what type of expense and what type of income will be recorded in PL appropriation account? See, when making gross trading account, that is also a nominal account, and we record all kinds of direct expense and direct income. Like sales, it is recorded in trading account because it is a direct income. Any business organization, the direct income of a business organization is sales, therefore it is recorded in trading account. Similarly, purchase of raw material. So purchase of raw material is a direct expense. Without that, no business can flourish. No business can even go to the next step. So it is a direct expense. So purchase of raw material are recorded in the trading account. So all direct expense and direct incomes comes under trading account. All indirect expense and indirect income comes under PL account, and all expense related solely to the partner are recorded in the debit side of the PL appropriation account. So you can take a note of this, that while recording the expenses in PL appropriation account, that is in the debit side, we will record those expenses which are solely made by the business for the partners and not for anyone else. Similarly, incomes which are received from the partner, all indirect income received from the partner, they are recorded in the credit side, that is income side. Okay, so what happens is, like let me tell you a story of doing a business. Suppose I ask you to join with me for a venture, for a business. So what I will ask for a lump sum amount of money which is regarded as capital. We know that is known as capital. So you will invest that capital in my business or as in your business also, because you will also be a partner of that. So there will be a query in your mind, that why will you invest that sum of money in my business and not invest that amount of money in a bank? You could easily put that amount of money in bank. Suppose 5 lakh rupees. I asked you for 5 lakh rupees to invest in the business. But why won't you keep that in bank? The thing is that while keeping in bank, you will surely get an interest on your deposit amount. But in case of business, there is no surety of whether there will be profit or loss. So what you can do, you can say that you need a fixed rate of interest. Just like you get from bank, you need a fixed rate of interest from the business. So business agrees and to your point and says that the business will pay you interest on the amount you have invested at a specified percentage. Suppose 6%, 4%. That is known as interest on capital. So who is bringing the capital? Partners are bringing the capital. Who is paying the interest? Business is paying the interest. So this is the expense of a business solely made for the partner, and hence it will be recorded in the debit side of the PL appropriation account. And as I told, all expenses will be recorded in the debit side. So therefore, interest on capital is an expense made by the business solely for the partner. It cannot be made to anyone else, because capital is brought in by the partners only. Therefore, interest on capital is an expense solely made by the business to the partner, therefore it will be recorded in the debit side. Next, now the first condition gets clear, where you have decided that you will not invest your money in bank, but you will invest your money in the business, because there also you will be getting interest. In business also you will be getting interest. Now the second query is, when you join a business, you can't do a job, because it is not possible for everyone to dedicate a single time in two ventures. Once you are doing job or a business, it will be very much hectic for you. So you have to choose one, and as you are doing business, you have to leave the opportunity of job. Now your second query will be, if you were doing job, then you would have got a fixed amount of salary which will help you in day-to-day expense of your family. So in case of business, that is missing, because at the end of the year the business comes to know whether there is profit or loss, and in case of profit you can get your share, or in case of loss you won't get the share. So how the whole year will go on? There is a query in you that if I would have been doing a job, then I would have got some fixed amount of salary with which I could have continued my day-to-day expenses of myself as well as for my family. But in case of business, I will get that amount of profit if the business makes any profit at the end of the year. How this 12 months will go? The next solution is, the business decides that it will give you salary too. So this is known as partner salary. Business gives two types of salary. One is salary to the employee, another is salary to the partner. Just because you are dedicating your time for the business, just which you would have been done in case of a job, they would have paid you salary. No, business will pay you a salary. And this salary is solely for the partner, it is not linked with the employee's salary. And therefore, it is known as partner salary. It is solely made by the business. This expense is also solely made by the business and for the partners. And hence, two salaries is recorded in the expense side or the debit side, because it is a nominal account, and in a debit side we record all expense and losses, and in credit side we record all incomes and gains. Now, next is commission. So the two problems get solved, that you will not put your money in bank because you are getting the same interest or a higher amount of something from the business itself. You are not doing job and you will continue in business because the business agrees to pay you salary just like any job will do. Now, commission. The third query which will rise in you is, in any job, there is a term used that is known as incentive. What is incentive? Incentive, you can say in normal language, is a performance bonus. The more you do work, the harder you work, the harder the company pays you. They give you more and more incentive benefits. So you see, now you will place a question that if I would have been doing a job and if I would have done much harder work, then I would have got commissions and incentives, etc. Now the business also agrees to this point and says, if you can make some good initiative in the business, if you work much harder, if you can increase the sales, the business will also pay you commission. Suppose you are a partner and the business offers you that if the sales of the business goes above 5 lakh, it will give you 10% commission. So it's an incentive. What is the incentive? To do your work harder so the sales of the business rise up to 10 lakh or 5 lakh. And if you put your hard work over there, it will rise, the sales will rise, and on that condition, you will also get a commission. This commission is also commission paid for the partners, because there are another type of commission which is paid to the employees or any other third party. But this commission is for the partner. So this is an expense made by the business solely for the partner. So you should keep in mind that salary and commission, whether these are partner salary or normal salary, partner's commission or normal commission. In case it is partner's salary and partner's commission, therefore we can record it in the PL appropriation account, because these expenses are made by the business solely for the partners. Done. Now the point is, as I discussed earlier, that you have not deposited any amount in bank and you have invested all amount in my business. Now the bank people or the representative of the bank don't know you. So what happened? You need some money, there is a crisis, suppose there is a marriage occasion or there is some festivals, you need some loan. You went to bank, the bank manager denies to give you any amount of loan or any kind of advance, because what he thinks? He thinks that you have not deposited any money in the bank. He don't know you. So why will he give the loan? Now your query will be, so from where will I get the loan if I am doing business? Because bank will not entertain me because I have invested all my sum of money in business without keeping any relationship with the bank. So the business now agrees to provide you loan also. Just like you have invested money in it, in your crisis you can take loan from the business. And when you take loan from the business gives you a condition that just like if you would have taken a loan from bank, then you would have to pay the interest. Similarly, you have to pay interest to the business also. So suppose you have taken 10 lakh rupees as loan, or you have withdrawn from the business. What you have to do? You have to pay interest to the business. So this interest is earned by the business. It is income of the business. So it will be recorded in the credit side. There is interest on drawings. The amount you draw, you need to pay interest. Just amount you draw from the bank, you need to pay the interest. Similarly, this interest is earned by the business and solely from the partners. No one except the partner can withdraw money like this from the business, and therefore no one can pay the interest on drawing. The interest on drawing is basically paid by the partner only. Okay, in this case. Also, we'll record these expenses here, we'll record these incomes here. Before that, we need to write the by net profit. Just like in trading account, we get gross profit, and that gross profit amount is transferred to the PL account. Similarly, after doing PL account, we get net profit, and that net profit is transferred to the PL appropriation account. And finally, from there we get distributable profit, it gets transferred to the balance sheet. This is the chain and the relationship between all the accounts. So you just pause the video and kindly write the whole chart, this whole account. So what you have to write, if the words are not clear, I am repeating it, so try to follow. So you have to write debit here, credit here, PL appropriation account, this is particulars amount. Now interest on capital is current oblique or slash capital account, and here is the value. B is current oblique capital account, and here is the value. You do the sum of these two and you put the final value outside. So I have taken here 2 partners as an example. So you can take 3 partners also as per the sum requires. Now 2 salaries. Similarly, A is current account or capital account, and you need to put the value over here. Then B is current or capital account. The salary received by B you need to put here. You need to sum up and put here. Then 2 commission. A is current account or capital account. The commission received by A. B is current and capital account. If any commission received by B, you need to add both and put it here. Then you need to put interest on drawing. A is capital and current account. The interest paid by A. B is current and capital account. Interest paid by B. Sum up and here. And after that you need to make a total, and there will be a balancing figure either here to distributable profit or to distributable loss. There is a star mark. Either there will be distributable loss or distributable profit. It's not like that every sum will have a distributable profit and loss. You know, it's just nonsense. Now, just few minutes back, what I discussed, that debit records all expense and losses, but what I have written, distributable profit. So distributable profit is written in the debit side, but debit is related with expense and losses. So why I have written profit? Actually, profit is for the business. Profit is written here because we all know that if a business earns any profit, it needs to be distributed to its members or its partners or its owners. So it is basically an expense of the business because we make accounts for the business, not for the businessman. So for the business, this amount needs to be distributed. This amount needs to be distributed to the partners. So this is expense. You can just like the interest on capital is paid by the business. This profit is also paid by the business. To whom? To the partners. Because no one else can take the part of the profit. Profit can be taken only by the partners solely. Okay. So similarly, if there is a loss, this loss means what? There is a crisis, and this crisis needs to be met up by the partners. Therefore, loss is recorded here. So it is an income for the business because the crisis, when there is a crisis, who will invest? A and B will invest again. So the amount they are again investing will be an income for the business. Therefore, loss is recorded in the income side because loss is basically an income, and distributable profit is basically an expense because that needs to be distributed among all its partners. So here comes the PL appropriation account. This is the basic chart. You need to go through it. You need to write it. And now the second part I will discuss. You need to take a note of this also. Capital account, there are two types of capital, fixed capital and fluctuating capital. Okay, so in case of fixed capital you need to make two accounts, one is capital account, one is current account. In case of fluctuating capital you need to make only a capital account. Okay, so if the sum is silent account, take this note, if the sum is silent about the nature of capital, we need to consider it as fluctuating capital. Take a note, this is very very important, because while doing sum in many questions it will not mention that whether it is fixed capital or fluctuating capital. If the question mentions about fixed capital, we need to make two accounts along with this. If the question is mentioning fluctuating capital, we need to make the capital account along with this. If the question is silent about the capital, then we need to make fluctuating capital, that is only capital account, along with this. Hope this is clear. Next, the types of ratio. What are the various types of ratio or profit sharing ratio? Different type of profit sharing ratio. Different type of profit sharing ratio. The first one is equally. This equally is 1:1. Whatever the profit is, it will be distributed 50-50. 1:1. If 100 rupees is the profit, one will take 50, another will take 50. If 60 rupees is the profit, one will take 30, another will take 30. If there are 3 people and the amount is 60, 20 means equally, the profit will be distributed equally, means this distributable profit will be distributed equally. Number 2, capital contribution ratio. Capital contribution ratio. What is this? Suppose A invested 2 lakh and B invested 1 lakh as a capital. A invested 2 lakh as a capital, B invested 1 lakh as a capital. So what will be the ratio? Ratio will be, you need to write like this: 2 lakh is to 1 lakh. And you need to take it in the lowest form. This 50 cut, this 50 cut. So 2:1. So ratio will be 2:1. And third ratio will be the agreed ratio, right? Agreed ratio. What is agreed ratio? Suppose A and B are partners and they agreed to share profit and loss in the ratio 3:2. This is agreed. They decided 3:2 will be the ratio, or 4:1, or 2:5. This is an agreed ratio. On capital contributing ratio, the amount of capital we need to put is 2, and we need to take it to the lowest term, and that will be the ratio. And last one is the equally, that is 1:1. These are the various type of ratio. You need to note it down and wait for the next video, because it is not possible to do the whole introduction in one single video only. Thank you.